Well, good afternoon, good morning. Welcome to the session for the forum. My name is David Craig. I'm the co-chair of the Task Force on Nature-Related Financial Disclosures, and it's my real pleasure to host you and our esteemed panel on this topic of spatial data, sometimes called spatial finance or even geospatial ESG. Many terms are in use, and I'll give a little bit of an introduction of that. I'll introduce our speakers, but first, before that, just some housekeeping. We are recording this for the benefit of people who can't participate, and we'll be sending the recording around after the webinar. You should put your Zoom into speaker view. It gives you the best experience of viewing the presentations. And please do use the Q&A function for your questions. Feel free to do that as we go through. We will try and answer those questions when we get to the end of the panel session and have that discussion and invite questions to come into the audience, but we'll be doing that through the Q&A function. So as I said, the topic of today is how can spatial data innovation support management, identification, disclosure of nature-related risks and opportunities. I'll say a few words about this topic and then introduce our panel who are going to lead us through some very practical and real case examples of what's been done in the past and also what's happening in the future. Spatial finance is not really that new. Tracking ships, pipelines, energy, producers, weather patterns, agriculture has been done to help trading and investing for many years. It's been done to look at natural systems and ecosystems. But what we are seeing that is new is a much higher focus on demand, to focus on location-specific aspects of financial investments, to help manage risk or business activity. And we're also seeing many, many more new technologies enabling both better, more reliable, more real-time data sources, enabling the aggregation and the interpretation of those data sources to be a lot easier. So if you like, something that has been around for at least 10 to 15 years is really accelerating by new demand for information on a company's assets and how they interface to the natural and human societies. And it's also been influenced by the availability of much more and much better data. So what's really driving this demand for the spatial data? Understanding climate change and the physical risks that creates to an enterprise, understanding nature-related risks, those dependencies and impacts, and understanding risks not to just your own direct operations, assets or investments, but also to your upstream supply chain. These aspects becoming ever more important, and the data to enable these assessments is becoming more available every single day. As you're all aware, in the first 0.1 beta release of the TNFD framework, we highlighted the need to assess locations of assets and operations and assess ecosystems, dependencies and impacts in those locations. And this requires a level of granularity and understanding that some companies may already have about the assets and where they're located and the ecosystems there. But for many companies, this is still quite new, or they need to build it, and they're in various degrees on that journey. In MSCI's research report published just this May, they said location matters. That was the name of the report, and they estimated that 39% of companies in the MSCI All-Country World Index, the AWCI, had operations of high biodiversity sensitivity, ranging from electric utility providers, renewable power providers, metals, mining, agriculture, really across sector. In our first release of the beta, we also completed a report on data sources. We found well over 35 commercial or governmental or NGO-backed companies now providing location-based assets data, location-based environmental, species, and biodiversity data. The list in our next release of that paper will get much longer, and it's growing as new companies and technologies evolve, and the picture is changing constantly. What is still missing though, and what is still a gap, is the ability to really take that bottom-up view of geospatial data and integrate with the top-down financial view and asset data. And so plugging that nature finance gap, as we call it, is something that our panel will discuss today and give some real examples of how they're trying to do that. So without further ado, I want to introduce the panel. Firstly, we have Christophe Christiaen. Christophe is the Innovation and Impact Lead with the Oxford Sustainable Finance Group and Deputy Head of the Spatial Finance Initiative, which he co-founded. So we're very lucky to have Christophe talking today. Before joining the University of Oxford, Christophe set up the Satellite Applications Catapult Sustainable Finance Program of work, stimulating geospatial technology innovations for financial services. Previously, Christophe held roles at the European Space Agency in Helcom. He holds an MSc in Business Engineering from the University in Antwerp, and he specializes in finance, accounting, and environmental economics. So we clearly have a real expert in the field here. Secondly, I'd like to introduce from ELSEG, Florian Gallo. Florian is a climate scientist with a background in earth sciences, which focuses on landscapes and landslides. He currently leads the research on physical climate risk at ELSEG. He previously worked for Carbon 4, a French climate consultancy company, where he was leading projects on physical climate risks and adaptation for finance and corporates. Prior to that, he spent 3 years as a climate service scientist at the UK Met Office in Exeter, developing usable IP and products and training meteorologists in Africa and Asia. It's great to have Florian here today as well. My third guest and panel member is Mary Ruckelshaus. Mary is the director of the Natural Capital Project, NatCap, and a senior research associate at Stanford University. Mary has previously held leadership positions with the US government, the National Oceanic and Atmospheric Administration, and was an assistant professor of biological services at the Florida State University. The main focus of her recent work is on developing standard approaches for valuing nature and mainstreaming them into high leverage discussions globally. She's been a lead author and reviewer for the 2013 and 17 US National Climate Assessments. She's on the board of the Wild Salmon Center and has served on the board of the directors for the Nature Conservancy Compass and as a past chair of the Science Advisory Board. She has many other accolades, both in boards and her academic background from Stanford University and a master's degree in fisheries from the University of Washington. So we're very lucky to have Mary here as well. And then last and not least, Martin Moen. Martin is the CFO in Hub Ocean, an independent and non-profit foundation established to unlock the power of ocean data. He's also the CFO in RevOcean, a philanthropy organization currently building the world's largest research and expedition vessel, aiming to improve the understanding and create sustainable solutions for the ocean. Prior to joining RevOcean, Martin worked at Aker BioMarine, overseeing financial matters in relation to vessel operations, new builds and investment and accounting. He's also worked as a consultant and auditor for 6 years at PwC, serving clients in the finance, shipping and offshore sector. And he holds 2 master's degrees in finance economics from the Norwegian Business School and is a certified public accountant. So it's very good to have someone focusing on what sometimes we don't focus enough of, which is the health and well-being of the oceans. So this is our panel. And what I'm going to do is ask each of our 4 guests to give a short presentation. They've got a few slides. They're going to make it very visual. One of the advantages of spatial data in finance is you can show the visualization of these things. After that, we're going to have a moderated Q&A, and we'll also try and address some of your questions from the audience as well. So I'm going to start off with Mary. Over to you, Mary.
Thank you so much, David, and thank you everyone for joining today. I'm going to give you a little overview of the Natural Capital Project's demonstrations. We call ourselves NatCap, as David said. And what we've done over 15 years is work in many of these places shown on the map and others to show how nature's values, spatial information on the ecosystem values can inform decisions. And so each of these places on the map are places where we've shown how the data that are available and modeling that we can use can transform the way policy and finance decisions are taken. So next slide, please. So I'm gonna just give a really quick overview of one of those places, but I wanted to say that we have globally available data that are mapped and modeled for probably a half a dozen, maybe almost 10 ecosystem services globally now. You can see them on a prototype data viewer that we have on our website shown here. And I'm happy to field any inquiries that we have. All of our data are open source and freely accessible. And we really, our dream and our success is when people use that. Next slide. And I'm going to show you how that happens in one place today, just to give you a feel. And this was working with the Bahamian government, asking these 2 main questions. So this is primarily initially from a public sector point of view. They were curious about where and how much do existing habitats like mangroves and coral reefs and seagrasses reduce the risk to people and infrastructure from coastal hazards now and under future climate change. And then in particular, how can these natural habitats boost human development in means that are very tangible to all of us, access to markets, schools, and also safety from sea level rise and storms. Next slide, please. So if you are a company or a financial investor, these questions are similar, but maybe slightly different. So you might be curious about where are the opportunities for supporting economies or to remain safe from storms and other hazards that are secured by natural capital. So where, if you have enterprises or assets in the Bahamas, where is natural capital making those assets and your people, your workforce safer, and where can they support economies? And secondarily, where are the risks because natural capital is itself under threat or not functioning properly? Next slide, please. So what we do in all of our engagements, and you can go to the next slide, this is animated, Eliza, thank you, is look at new science that might be needed to be made. So there's a lot of spatial data available globally to create the information and the answers to the questions that the Bahamian government and businesses are asking. But in many cases, we have to create new science. In this case, we had to figure out how to model the effects of these different habitat types on wave height and wave energy, and therefore the damage that's done or not done to people and property and infrastructure along the shoreline. Next slide, please. And what results from these different models are lots of sophisticated algorithms and results. And then many times, in the case of the Bahamas here, we're showing the Office of Public Works how to use these tools. So this is just a screenshot of a viewer tool that we made for the Bahamian government that shows where habitats in the warmer colors are degraded and therefore not as able to protect the shoreline from sea level rise and storms. And the cooler colors are where the habitats are functioning very well and therefore the risk is lower. Next slide, please. And unfortunately, right in the middle of our engagement with the Bahamas, a massive Hurricane Joaquin hit and caused terrible, tragic damage around the islands, especially the family islands outside of Nassau. And it validated our view or our models. So in many cases, it got the attention of the country and they were able to use our viewer, which very well predicted where damages were going to occur, to find where places would be safe and where they could get people out of harm's way. And now are using it to shore up and protect habitats for their final protective values. Next slide, please. And just the result I'll show here is that these models that are spatial that we have can show the co-benefits of protecting different habitat types. So not just coastal risk reduction, but also in the case of the Bahamas, looking also at tourism and fisheries, which are big drivers of their economy. Next slide, please. So this is all done by our open source and freely accessible Invest software platform. We have 24 models that are available and are always being improved by our network of over 300 research and implementation institutions around the world. And then last slide, I just wanted to emphasize that this example in the Bahamas, if you can show the last slide, is driven by there might be one more slide going the other way, but I just wanted to say that there are very high level data sources from satellites and other new data technologies, and that those can drive models and generate results for a host of different decisions. I guess my last slide must have gotten corrupted. I'll stop there. Thank you very much.
Thank you, Mary. It's very interesting real life application of the models, and particularly as a hurricane hits while you're actually doing the work. And we all remember the terrible destruction that hurricane had on the Bahamas. Thank you for that. I'm going to quickly hand over now to Florian, who'll go through the climate initiative that they're working on, in particular around physical risk and location. Florian.
Yes, I think I've started my camera. Is it working? Can anyone hear me?
Yes,
and
we
see
can.
me?
We can hear you and we can see you.
Okay, perfect.
We can see you
So slight last minute change, David. If you remember, we went. I mean, I'm going to actually focus on a more, I would say, more practical case studies regarding the latest analysis that we've done at LSEG on the impact of climate change on hydropower production. But happy to have any question about the US Climate Initiative if you want to. So if we can go to the next slide, please. So yeah, just a bit of introduction to physical climate risk. So I know that we are here to talk about natural related disasters, but actually we are at the interface between nature and climate, I would say, especially when we look at water availability. But when we look at physical risk, we really have three main components, two of them being completely spatialized. So the climate hazard is the evolution of the climate due to climate change. The exposure is the asset level information, where are the assets and how exposed they are to a climate hazard. And the vulnerability point is the response of an asset to a given climate event. And to calculate the physical risk, we have to aggregate these different type of information, basically merging spatialized and non-spatialized information and layers. And to do that, what we are using for this specific case is the SPEI. I won't go into the technical detail on the statistical detail, but the SPEI is basically a way to see if on a given region you have wetter or drier condition compared to a normal, and that's usually used to do some short-term prediction for water hydropower production. We are trying to apply that to the next decade now. So if we go to the next slide. So I'm gonna skip that one, but I guess that the methodology will be quite clear when we move on. And the type of data that we are using, I was saying like spatial and non-spatial. So the spatial data that we are using, and that's really different kind of spatial data. So that's the historical evolution of SPEI. That means like historical climate observation and reanalysis. So that's merging ground observation with satellite observation. We are using future climate projection, so modeled climate projection, again spatialized. Asset level data, that's the location and the production of each of the plant in the US and worldwide, and we're again trying to merge all of that to predict an impact on hydropower production over the world. If we go to the next one, really quickly, we look at two main impacts of climate change over water availability and hydropower production. First of all, the effect on the average production and the associated cost of electricity, and also the impact on the frequency and the likelihood of extreme dry events that can basically jeopardize the financial stability of a given asset, because you will have long months of really low production that can jeopardize, again, the production of an asset, but also jeopardize the supply of electricity for a given region or a given national grid. So we are calibrating that over the past 40 years, let's say, and looking at what's going to happen in the next 3 decades and at the end of the century. And if you go to the next one, please. Really skipping all the statistical approach that I wouldn't be able to describe you anyway. I'm the climate person. I'm not the math person in my team. But that's the type of result that we have. So again, a spatialized view of all hydropower plant facilities in the world, and trying to look at the impact on the cost of electricity. Sorry, it's not really easy to read because you have a lot of kind of red dots, but trust me, you have strong impacts. For example, in the south of Brazil, you have some strong impacts on average over the Mediterranean region. So that's the first visualization, looking at the average impact over the world. If we go to the next one, we'll have the same type of result, but for the likelihood of having extreme event, and you can see that the regions are quite correlated, but you start to see some impact also in Mexico, in the United States, over this likelihood of having like really low months of production. And yes, I'm almost done. If we go to the next one, so that was the really spatial view. What interests us as a financial institution is not only the spatial view, but also the corporate view, and we'll probably talk about that later, but linking the location of the asset, linking the production of the asset with the company that owns them or that operates them is really important. For a company will always have the location and the description of its own assets, but a financial institution or a financial regulator or a financial insurance corporation will actually want to look at a large portfolio of corporate or assets, and they will usually don't have the list of assets linked to every line on the portfolio. So that's usually the tricky part for us, but we were able to do it for that case study, and being able to aggregate all the assets at a corporate level and see which corporate were most at risk in this environment. And I will probably stop there.
Thank you, Florian. The last slide in particular was really interesting, because what you did was showed that nature in this context, impact on water levels and droughts, translated into companies and asset locations. I think that's illustrating that nature to asset gap that we need to close, and we're doing this work, but thank you very much. I'm going to hand over to Christian now. He's going to talk about the Smith School GeoAsset Database Project. Christophe, sorry.
Thanks, David. No worries, it's confusing my name. So hi everyone, I'm Christophe. I am at the Oxford Sustainable Finance Group, which is a research group at the University of Oxford. We set up a couple of years ago the Spatial Finance Initiative, which kind of had as an idea and objective to promote the use of geospatial data and analysis in finance, particularly for green finance, and as mentioned earlier, answering some of that demand for kind of more granular, let's say, asset level insights on a whole range of environmental or climate related risks, impacts, and opportunities. Today, I'll particularly talk about a project as part of the initiative, which is called the GeoAsset Project, where we're trying to fill some of the gaps of asset data that were mentioned by David and Florian, in trying to create open asset level databases for high impact industries. So tying physical assets to their location and their ownership and some key production information. So if you go to the next slide, please. I think we all appreciate or have understood kind of the relevance of spatial finance or spatial approach or asset level data in this context, particularly for nature, where a lot of the impacts and risks and opportunities are extremely localized and kind of very much context specific. So a good understanding of where your assets are, what's happening on the ground is extremely important to do any assessment properly. Kind of asset level data we break down into a couple of, I guess, data types, as is also explained and outlined in the TNFD beta framework. We've got the observational data coming from, the wealth of sensors and, for instance, satellites, all the kind of data sources that are increasingly becoming available, which are then transformed into model data. But to actually make all this wealth of geospatial data relevant, you need to tie it to, the physical assets and the companies that own them, the economic operations and the supply chains, of businesses, so that as a financial institution, you can actually make sense of the geospatial data. And this is the asset data level. And this is where there's quite a few gaps globally for many industries, at least kind of in terms of understanding where the companies or a range of companies or an industry's assets or main production assets are located. So if you go to the next slide, please. So this is where we've started a project now 2 years ago, the GeoAsset Project, which tries to uncover and map where are all the plants, for instance, in the cement industry located, where all the cement plants located, who owns them, what's their capacity, what's their production type, how old are they, and a couple of these kind of key information points, which are important to actually build a whole range of kind of risk and opportunity and impact analysis, ranging from transition risk on the climate side to equally kind of physical risk or nature impacts, very much kind of on the nature localized side. So if you go to the next slide, please. We try and do this by pulling together a whole range of data sources that are publicly available, because our point is to make these databases for these industries openly available so that they can be used not just by financial institutions, but also by regulators, NGOs, researchers, to actually increase transparency on these sectors and start to bring in external data points to kind of complement existing disclosures or other data sources where they're not available. So we build on, we try to pull together a whole range of kind of, information that is disclosed, what are companies reporting about their assets, where are they located, what are regulators making available in terms of heavy polluting assets in specific geographies. If you go to the next slide, where can we find, for instance, assets or information in OpenStreetMap, which is a big open geospatial kind of crowdsourced community platform effort that contains an awful lot of information. So we try to pull together these kind of openly available data sets, standardize them, and aggregate them into these single databases. The next slide, please. Now, this works to some degree. We've been able to capture quite let's say a few assets, or the easy to capture assets in a range of geographies, but we still had some kind of data coverage gaps, particularly in Asia, South and Southeast Asia. And then we decided to train machine learning models on satellite imagery to identify the plants we're interested in. So in this case, it was cement and steel plants. So training a machine learning model that, recognizes what a steel or cement plant looks like, deploying that on a whole range of kind of satellite imagery over the regions we have data gaps, which then returned to us kind of likelihood of areas where assets were located, which we then manually validated to kind of complement our database. If you go to the next slide, please. So that was kind of identifying the kind of where are the locations of these assets located. In some cases, in the case of cement, for instance, we were able to kind of infer the capacity of some of these plants based on the dimensions of the kiln, which is directly correlated. So we were able to actually extract some asset features or characteristics based on this visual information to again fill gaps. If you go to the next slide, please. Which we also try to complement with either disclosed or reported data, which we're increasingly trying to automate the collection of using natural language processing techniques to paint this picture and pull it all together. Next slide, please. Maybe to go to the next slide, as I'm running out of time. So in summary, this is kind of these efforts that we've been doing was really to kind of pull as much data at the asset level together that we could, leveraging open data sources, making it standardized, and making this available for a whole range of users and use cases. So you can actually download our cement and steel global databases on our website. And we're now starting to look at other industries such as petrochemicals, waste management, but also more paper and pulp and agriculture related assets, which actually will be a lot more, if you like, relevant for the whole nature finance debate. So this is just an example of how there are ways to collect asset data and how we're trying to stimulate the broader uptake of spatial data and spatial finance by making these available. And I'll stop there. Thank you.
Thanks, Christophe. A quick zip through the global cement industry on a map. And of course, one of the questions, and many questions are coming in, so please keep coming them in, is cement is highly intensive use of water, amongst other things, and Holcim, who are on our task force, will talk about water usage. And so I was thinking about how you then map that location analysis based on water usage and water sensitivities in each area. But I'll park that for the Q&A session. And it's great to hear that you're going through other industry sectors as well. So I'm sure many people on the call will be asking when you're going to get through all of the industries of the world. But again, we'll park that. I want to go to our last panel speaker before we start the discussion. Martin is going to talk about the geolocated exposure metric, which comes out of the Hub Ocean's work on the ocean data platform. Martin, over to you.
Thank you. I'll just see if my slides comes up, but I can wait a little bit. Does it work?
Well, we can hear you and see you, but I don't think we got the right slide up yet.
I don't think so either, but here we
go.
Yeah. So my name is Martin Moen, and I am the CFO in Hub Ocean. And Hub Ocean is a Norwegian foundation that is founded by Aker Group, Rev Ocean, and the World Economic Forum. And we are a member and affiliate of the Center for the Fourth Industrial Revolution, and we're operating the Ocean Data Platform. We're also leading the work on the Ocean Data Action Coalition in partnership with Microsoft. And Microsoft is also a scaling partner for what we do. So a little bit of the background. If you can go to the next slide, please. And our key tool in our toolbox is the Ocean Data Platform. And this is where we try to create a lot of applications running on top of this platform. It's all spatial, and we're trying to come up with good use cases for this platform, and it's ocean related. Next slide, please. So this slide is basically giving a good overview of how we work with the Ocean Data Platform. There we start on the bottom there with open data sources and try to connect them up. There's a lot of there's a lot of databases out there, and it's all about connecting them. We're also trying to unlock new data sets by working with the science institutes, with the industry and citizen science to share more data. And what we're trying to do is to connect all that data up in a common place where you can search and find the data, And we create applications and tools so users can come in and visualize, analyze, and measure impact basically on their own. So this is what we're trying to do with the Ocean Data Platform. If you go to the next slide, please. We're also working with something called Lighthouse Projects, and this is how we interact with the members and the use and the members and partners of the center. We just try to set up signal use cases that can demonstrate the value of starting to use the data. And we have many Lighthouse that is running, but I will focus on one of them in particular. So if you go to the next slide, we have something that we have started with the Green Digital Finance Alliance, and we're looking particularly into geolocated exposure matrix for the shipping industry. And it's all about demonstrating the potential and feasibility of a geolocated exposure indicator that can measure negative ocean activity. And this is related to shipping activity and fishing activity in the start. And for this demo, and it's trying to prove the concept, we have bundled in AIS data, so shipping data and vessel history, and tie that to science-based data sets on marine sensitive area and try to measure the negative impact. If you go to the next slide, please. So this is where we started. We started, actually, it's pretty recent. We started a month ago, and we had a 3-week sprint where we utilized the tools that we already have in the Ocean Data Platform, something called the Ocean Data Connector, which is a data science tool that we can utilize to create insights from the data. It's using Python and it's standard. And we can also then link easily into the data set we already have ingested into the Ocean Data Platform. And one of those data sets is activity data on ships, AIS data. And we were able to ingest that pretty quickly and also calculate the emission from these ships and traffic in 2021 for this use case. If you go to the next slide. Then we fused that data set with marine protected area data set, and we started with the world database on protected area. And the ambition is to take in much more of these key data sets on sensitive areas and also have a dynamic ingestion plan over time, so we can be not looking in a static world, but actually being dynamic when it comes to seeing this area changing over time. And for this demo, we took the 2 data sets together and we created a visual interface. So if you go to the next slide, we'll have a quick overview of how that actually looks. And what you see here is if you I think you have to push play on it so you get some interaction going. But the actual, if you go on back, this is the previous one. But the whole idea, if you go back one slide, please. Thank you. The whole idea there is that it's interactive, but the lanes or the point to point is the shipping traffic and the ship emissions, and it's overlaid with marine protected areas. And the color combination is basically saying if it's a high impact area of negative shipping activities and fishing activities. And this demo, if it was interactive, could actually show you that if you go into a specific area, you can zoom in, you can look at that particular area, and you see, for example, the orange bit in the north of Denmark. It's orange, and that's because there's a lot of ship traffic going through there. There's also a lot of fishing happening there, and it's a marine protected area. And one of the problems is that you don't really know this before you look at the data. So regulatory party governments can have a easy visual interface where they can look and find marine protected areas that are not really protected areas, and companies and regulatory parties can do their best to avoid those areas. If you go to the next slide. We also tried another concept, and that's creating basically a real-time report on negative vessel activity. So we did a geofencing of this area in particular. We took a day's worth of AIS traffic, and we see if we can actually get automated reports on ship entering an area where they shouldn't be. And that worked fine. So what we're seeing here is that this could be actually scaled up to a larger data sets globally, and we can create these real-time reports that financial stakeholders or companies can actually actively use to measure activity that is negatively impacting sensitive areas. If you go to the last slide, I think that's a summary slide there. I think I'm running out of time as well, but basically what we were able to prove, and this is what we want to take a step further, is that we can calculate emission to air. We already have an open source algorithm to calculate that. It's not really geospatial exposure, but it's part of the big problem with emissions. And it also feeds well into number 3, where you can look at measures to air, but also measures of emission to sea, and looking for other kinds of pollutions like noise or other contaminants that goes into the water. Open loop scrubber system, for example, is something that we would like to look into further with participants in this project. And finally, the real-time indicator for negative activities in sensitive areas, that geofencing, and creating weekly or monthly reports on negative behavior, we believe is a really good tool for different actors to start using. So I will leave it at that. I think that, yeah, thanks.
Thank you very much, Martin. And now I think we'll open it up to some questions. Really interesting what you showed there about marine sensitive areas mapped over to ships. We've been looking in my last role at ships for many, many years because of the impact on supply chains. What I'm going to do now is if we just ask you, all four of you, to put your cameras on, and then we'll have a discussion based on the questions that are coming in. And one question I wanted to ask, and this comes up a lot of people on this call are not running a single company. They're actually running an investment portfolio of hundreds of companies. In fact, many of our members have thousands of companies. And so when we talk about asset level mapping to locations, we're not just talking about one company, we're talking about a whole portfolio of companies. And I'm just curious if anyone has any views of where you've seen that applied and done, because the scale of that is obviously very high. There's only so much bandwidth available. You can't go into every single company to every single detail. So I don't know if anyone on the panels had an experience of doing this at a portfolio level, not just at a company or an asset level.
Well, I might be able to take that one because that's basically my daily job. No, that's a tricky point, and not everything is perfect. As Christophe was saying, we do have some good quality data. It's not everything is perfect, of course, but some good quality data for some sectors. And for other sectors, we have absolutely no data. So we might have the location of the asset, but not the ownership. We might not have the production. We might miss half of the assets located in some places in the world. So that there are large gaps in the data. So when you do a portfolio analysis, the idea is not to be perfect, is to really highlight red spots, and then you dive into the detail. That's kind of the first point. The other point is that when you want to look at a diverse equity portfolio, for example, with many different sectors, the only way right now to do that is actually to buy third-party data, and these providers are basically saying that they have good coverage, that they have, but it's a black box. So you have no idea if that's really good or really bad. You have no idea of the variation of the coverage depending on the sector and depending on the region. So that's why, yes, it's feasible if you pay a lot of money. What needs to be done, and that's, for example, what we have been trying to do in the US Climate Initiative, what Christophe has been trying to do for a long time in the Spatial Finance Initiative, to bring all of that in the public domain and to have not the perfect data, but to have some transparency on the quality of the data, because that's really important. And there was also a point about accuracy. We need to know how accurate and how credible is the information to know what kind of decision-making we can take based on that. But we need to know where we are in terms of the quality of the input data. And that's really the kind of weak point, I would say, in that field at the moment.
Yeah. And Christophe, you may have a view on this. You've been looking at whole sectors. And I'm sure companies have come to you and said, well, I own several portfolios, either in one sector or obviously across sectors. How have you addressed that?
Yeah, absolutely. I think echoing a lot what Florian said, it's on a portfolio level, it's hard, particularly if it's diversified across sectors. The data quality varies a lot from sector to sector. I think probably the best available asset level or asset data, both commercially and open, is in the power sector. Open because it's been driven by emissions and climate considerations. And I think commercially because it inherently it's a lot of these sectors are also operationally it's important to know what these assets are. I think one of the at least issues traditionally with some of these commercial data providers of asset data is that these data sets were created for more marketing or kind of market intelligence purposes rather than spatial analysis. So even if for some sectors where there are commercial databases, that actually their geolocation information is very poor, as in like it gives you like which state they're in, or it gives the head office kind of location, which is not very relevant. And yeah, so that's a bit. I think actually on the one hand there is a big commercial opportunity for any kind of data providers, traditional or new, to try and clear that out and improve that. There's a few companies trying to do that. The transparency piece is indeed important, and the methodology that you use. And the reason we go also for a kind of sector by sector approach is because it's easier to do rather than going for the, the LSE 100 or the S&P 500 companies. And doing it on a sector by sector basis, it means also actually we can draw some kind of global conclusions and at least compare within the sector and do some sectoral kind of transition or impact analysis. So there is good, basically echoing what Florian said, there's a lot of good data. It's very different between sectors, but there's actually big, I think, commercial opportunity for anyone who wants to pick up.
I think the session today, obviously we just have 4 speakers here. We don't represent the entire data market, but it is a good illustration. This is moving fast, but there's still many gaps in terms of joining this data together. Part of that gap, I said, between the asset and nature. Mary or Martin, if you've got a view or thought, just put your hand up. I'll go through a couple of other interesting questions in the time we have available. This is from Pippa Howard, and a really good question. Well, actually 2 questions on this, but Mary, particularly in your area, you were looking at sort of risk impact and assessments, and maybe in Martin's area as well, but scenario testing and different categories of risk. How can we model that on these different categories? How can we measure the type of impacts they would have based on various scenarios? Have you seen any examples of that or done that, Mary?
Yeah, thank you. And that's a good question, Pippa. And on the last one about assets, we're working right now with Morgan Stanley to try to connect the asset data, which are tricky, as Fabian and Christophe just said, but show how the consequences of where an asset might be located of interest globally, what happens, what are the flood risks, what area will be flooded, what are the damages from that flooding. Also things like what are the likely amount of erosion that could happen around infrastructure? What about the water supply, as you mentioned, David? What about the dependencies of those assets on ample water, but also clean water? So we're using our 24 global ecosystem service models to connect to asset data and show what the consequences are. And often, as you all are saying, asset data are proprietary and sometimes difficult to get. Our biophysical models, our ecosystem change and value models are all open source and free. So if we can show, and we'll be sharing this information with Morgan Stanley, how to connect them, then that gives the asset managers ways to, when you do get those creative solutions for assets, how to look at the consequences spatially. And then Pippa's question, I'll just say we almost always use scenario analyses. We can use climate drivers for scenarios, any of the IPCC models. We can use development scenarios, sort of what is current development, what if a plan is implemented in any different region. So our biophysical models, again, are driven by changes in landscapes, changes in seascapes, and changes in climate drivers over time. So it's a really good point, and it's really useful for looking at resilience of companies, of financial returns, all of that sort of output metrics people might be interested in.
Yeah, and Mary, while you have the mic, there was a question in about biodiversity hotspots and pointing out that there's a real lack of data of some of these hotspots outside Europe or North America. Have you come across this and seen where those gaps are, or there are solutions to that?
Yeah, that's in many ways. It's tricky. There are lots of estimates of biodiversity, but as the question I'm sure is implying, it depends on the beholder, what biodiversity is really counted as. We just finished a global analysis. It's not published, but we're happy to share it. It's in review, using global biodiversity data and overlaying that with ecosystem service value data globally that we did for IPBES, for that big global assessment. So we can show how biodiversity and ecosystem service provision are related, and sometimes they're completely overlapping and sometimes they're interestingly distinct, and then also how those change under different scenarios. So happy to share that information with any of your attendees today.
Yeah, the IPBES database and the STAR network and others on biodiversity sensitivities is one of the leading ones that's out there that we're very aware of and familiar with. Just on asset mapping, just something I wanted to mention is I've come across several companies now that are in the process of using public data to map companies' assets to locations. I think the point that was made maybe by Florian or Martin, I can't remember who made it, which is knowing your domicile of the headquarters or which state you're in is kind of irrelevant. It's now down to that geolocation of where exactly each company is. But there are companies trying to do this off mining public data. And we'll include those in the next iteration of our data landscape paper that we're working on now, because we're literally discovering as we go along more and more these companies are working on this. Another question that came through, Christian was talking about, has anyone started to map agricultural assets? I've actually come across several companies in the UK now looking at agricultural data and agricultural assets. I'm sure there are some doing that on a global level as well. Has anyone else on the panel seen that? Martin, you were going to come in, you've got your hand up.
I think that was another question, not the agriculture, but just to kind of participate in that asset mapping and asset data discussion, because what we see is that one thing is disclosure for financial stakeholders to get more information about company behavior and actions. But another thing that we see is that a lot of asset data can be shared and used by others. So science could use that data from companies that they're not sharing because they're afraid of the liability that can lie down the track of sharing that data and the uncertainty of where that data is going. So what we're trying to do and working with Ocean 100 and other asset managers and asset owners is to try to incentivize companies to share that information and make it publicly available, because we need more data for scenarios analysis. We need more data for the scientific models that we're running and to make the right decisions. So just kind of a small comment on that asset data discussion.
Yeah, no, it's a good point. I mean, who owns a ship? Sounds like a simple question, but it's actually quite complicated. We all know the complexity of ship ownership and flags and those areas. Florian, you're going to come in on this.
I mean, just going back to the agricultural point, that's incredibly important, of course. You do have some national inventories or this kind of thing to have like the spatial location of different crops, crop types, varieties, and things like that. But you struggle to find consistency, and you will have way more data in Europe and in US than the rest of the world. That's the first thing. But the tricky point with linking that to ownership is that a lot of these assets, financial assets, are actually linked to an individual and not to a company. For a lot of agricultural and food industry businesses, they have contracts with specific individuals. So you do have some properties right and liabilities right in trying to map that to the owner, because it's not going to be linked to Coca-Cola, but it's going to be linked to an individual farmer most of the time. So it's a bit more sensitive than for many other assets that are directly owned by a company. So that's another difficulty.
Yeah, not easy. Christophe, there was the question on agriculture, but also someone asked, I think Flora from AP7, on, are you looking at supply chains? Supply chains are critically important. People not have to look at climate and nature risk of their own operations, but also upstream and downstream. Just curious of your views on that.
I think, yeah, I think it ties nicely with the agriculture question and the challenge there is, I think, challenge of agriculture is the sheer number of assets and then the ownership structures, which are very different also country to country and jurisdiction to jurisdiction. I think on a national level, there's a lot of good data available, but making it relevant for finance is not something I've seen very often by these national agriculture data providers. We're actually working on a project right now, or at least prototyping what we can do on agriculture data and kind of supply chains, but by looking at kind of the beef producing industry, looking at abattoirs as kind of the key anchor assets, and then trying to see if we can, knowing where the abattoirs are, which we can link to some of these big meatpacking companies, can you model from there or understand from there, either based on a spatial distance or network analysis from kind of accessibility of specific farms, which we can then identify using general spatial data sets, and link direct or indirect suppliers to that processing asset. And I mean, the results are mixed. It's not always super accurate, but it's kind of trying to improve than what we have at the moment, which is either very little or very, very opaque. So we're increasing the organizations, not just us, but others are trying to increase transparency in those supply chains by taking what they have and trying to do some clever machine learning modeling against either owners or these kind of more centralized assets, which you can then aggregate easier up the chain. So it's probably the biggest challenge of spatial finance or asset level data, the supply chain mapping and attribution. But I know a lot of clever people are working on it, but it's super hard.
Yeah, I mean, we used to do a lot of supply chain mapping for screening, not for purpose of climate or nature risk, but actually to look at screening and issues with sanctions and other areas. You know, how you pivot that then into a climate or nature type screening would be an interesting part of it. And on agriculture, you know, traditionally a lot of people looked at agriculture and farm productivity for trading of commodities, in the same way that people were looking at rainfalls to understand the electricity price tomorrow. That's been done for 10 years at least. And again, it's how do we pivot these into other use cases and make the data usable for that, which is quite interesting. One of someone CM came in and said that there is a sense is used to evidence the current state of associated opportunities for agricultural data. So it seems like there is some knowledge and body of knowledge out there that will input that to our data area as well. One question I had for the group, you're all from non-profit, NGO funded, other than Florian, of course, and certainly not NGO funded at LSEG. Just curious, this environment is very NGO based, philanthropic, with commercial companies coming in. It's very, very fragmented. Is this an industry that's going to consolidate? Do we see partnerships between NGOs and commercial companies? Christophe, I think, or Martin, you mentioned partnering with other providers of data. How do you see this landscape evolving? Particularly as you can see from the questions coming in, there's real demand for joined up data sets and more data on this. Anyone has a view on that?
If you don't mind, just a quick word, because I'm not about the NGO, and I will let the other talk about that. But from a private company perspective, from a data user perspective, there is a bubble on that right now. You have like startups appearing everywhere, raising dozens of millions of dollars in a couple of months. So that's, I mean, there's really some kind of craziness about that from a private startup company. Some are doing really good jobs. I mean, it's getting fast, and it might be getting a bit too fast at the moment. So we have to be quite careful about, again, the level of transparency and the use that we make out of the data. Sorry.
Yeah, and interesting that there's a bubble. We see the bubble. Which can be good and bad, because the credibility and validity of some of the data sets can be at pause. But Christophe or Martin or Mary, any views of the sort of commercial NGO relationship? How is this going to shape out as this becomes more of a demanding area than it even is today?
I guess we're sort of the neutral data providers, like many of you, and very, very much agree with Florian on the transparency and the crucial nature of that. So I think what we're seeing is, because we have the only global spatial data on ecosystem service values over different scenarios, that people are coming to us. And in our Morgan Stanley case, we had Swiss Re just take our information and use it. That I think more and more people, as you say, the demand is growing, and they're starting to want to know how to connect open data and open algorithms to a mix of other open data and algorithms, but also proprietary information. And our philosophy is, any way this gets taken in decisions is good. And then since our part is all open, that encourages others to be open over time, as investors need, reliability and trustworthiness in reporting. So that's the state that we see. We're definitely being flooded with demand, which is, we think, a good thing.
Yeah, my own observation from our members is a lot of them are actually creating their own data platforms, and they're supplementing that obviously with data sets from both commercial and non-for-profit and other providers. That there isn't we could use an analogy, the SAP or the Salesforce for this problem yet that exists in the commercial world that joins everything up and does it. And maybe that comes, but it's probably a decade away. For it, Martin, I see you've got your hand up. I'm going to give you the last word then. Seeing as we're coming close to the hour.
Very good. It's always good to get the last word. In terms of our view on the world, like, this is a joint effort. Like, business and industry can't pull this on their own. Science have to be part of it. We're talking about science-based targets, right? You have to then have science data to back that up, and you have to have the government and regulatory party to set the right tax levels on carbon, etc. So it's a joint effort by everyone, and I think the discussion we're having today is we have to agree on the standards on data. And if everyone goes out and define the data differently, and we have everyone doing the piping work and getting the data up in applications, like, then we're failing. Like, we have to agree on some standards, and we have to agree on some good ways to get that data up in a way that you can start creating the insights. And that's a joint effort for us.
Well, Martin, thank you very much. That's a fantastic plug, if you like, for the work of the TNFD. We are busy. We actually have a metrics workshop right now with various members, because we've got to agree on the metrics, and that will drive the data that is required. We're also updating the data landscape document. It's work in progress, and the first version was very good, but what we've learned is a whole lot more about the data companies that are out there that are growing, and how they're working. We have this big gap between the asset level view and the nature view, and there's gaps in the assets and there's gaps in nature, and it's joining those gaps up that will be the challenge over the next couple of years. The last thing that we're also doing is actually creating a data catalyst. We're getting together companies from both the private, the public, the NGO sector, to help give them the information of what TNFD is looking to demand from data providers and help them on that journey. We think that's an important part of the capacity building, because if better tools and better data are out there, as you can see from the questions that are coming in, then companies and portfolio managers in particular will find this a lot easier to do. It's quite hard at the moment because you're having to do all the hard work yourself. So that's something that we'll be launching soon. And we're very excited about helping build the capacity in this space. But I'd like to thank firstly our 4 panelists for giving their insights of how they're addressing this. There are many, many more companies out there, but I think it's fantastic to have 4 here from both the non-profit and commercial sector. I'd like to thank you all for your questions. We will be sharing slides afterwards. I think a couple of people have asked for that, if that's okay with our panelists. We'll be sharing the recording as well, and I look forward to seeing many of you on the next forum call. But this has been a fascinating discussion, and please keep the questions coming in afterwards, and we'll try and address them as well. Thank you very much, everyone, and thank you for our 4 panelists, Christophe, Mary, Martin, and Florian. Have a great day.
Thanks, David. Thanks, everyone.